Hi everyone, we are so excited to be here with you all. I'm Kriti, I'm the head of sales for Validus, and I have with me Milena.
Hi everyone, I'm Milena and I head investor relations and corporate development for Validus.
We are here to share more about Validus. We understand that you have a few questions for us, so we will start with that very soon. And before that, maybe Milena will take us through the introduction of Validus.
Sure. So just to give a brief intro on Validus, we've been around since 2015 in Singapore, where we're headquartered, and we've expanded over the past 5 years to Indonesia, Thailand, and Vietnam as well. Our mission is not just to drive financial inclusion for traditionally underserved SMEs, but to also help them to recognize their own potential and fuel growth across their life cycle financial service requirements. We're backed by investors like Vertex, the VC arm of Temasek, FMO, and Open Space Ventures, as well as other strategic partners who've helped us to grow across the region. We've now dispersed over 1 billion in lending volumes, over 35,000 loans. We're rapidly scaling up both regionally and in terms of the services that we provide. And we're really excited to announce that we've also recently acquired the spend management platform ClearCard to accelerate the next step in our journey, which is building ASEAN's first SME-focused and credit-led neobank. To kick things off now, we can start off with what makes Validus different, whether it's from an SME or an investor perspective.
Thanks, Milena. Thanks for the introduction and the question. This model that Validus uses, how it is different from our main competitors. That's because we count partnerships with the large corporates as one of our main differentiators. Our ability to form partnerships with the largest and the best in the region, including, say, blue chip corporates and large banks, has led to strong growth in each of the markets we are in. Our technology captures critical data points combined with comprehensive machine learning capabilities to identify high potential SMEs that may have fallen through the cracks of the traditional banking model. For example, there's an SME that is dealing with large conglomerate and we are one of their long-term clients. Because of this relationship, they can be assigned a lower risk rating and hence can obtain loans at a lower cost. So a combination of such data points are used for determining each case and their eventual rate of interest. This is like the proven technology that we have been using not just in Singapore, but across our ASEAN offices in Thailand, Vietnam, Indonesia also. Another important part business model that we have that sets us apart from our competitors is that Validus is Singapore's first fintech to be approved as a participating financial institution under the Enterprise Singapore's EFS scheme, the Enterprise Financing Scheme. In fact, this is the first time that fintechs have been onboarded under the scheme alongside local banks and established financial institutions. And this is like an acknowledgement for us, for Validus, that how key role we have in driving financial inclusion for SMEs that are underserved by the traditional lenders in Singapore.
And I think just to kind of go off of what Kriti was saying, from an origination standpoint, because we focus on these partnerships and supply chain financing, that's also meant that naturally for us, our target segment tends to differ from those of our peers. A lot of our borrowers operate brick and mortar businesses in the services sectors. And oftentimes, because they're delivering work for larger scale MNCs, the data that we get is focused on a segment that doesn't have much publicly available data on them. And so it builds a strong and defensible moat around the business, where a lot of other digital lenders tend to target lending on top of other existing digital ecosystems. So that would be based on data that a lot of other players may have access to. And I think, the profile of SME that we work with as a result has a lot of advantages in the sense that mortality in our segment tends to be low because many of them are working with these partners for a very long time. And they have a lot of recurring needs, which means that as an investor as well, you'll see familiar names come up every once in a while.
Okay, I wanted to understand from you on how does this SME lending model work for investors? So we have accredited institutional investors. So how can they gain private debt exposure through fintech platforms like Validus?
So I think the model itself is quite simple and straightforward for lenders. Lenders who are looking for exposure to a product that resembles traditional fixed income products, but also offers greater flexibility and the potential to earn a higher yield, or even those who are looking to make an impact investment while maybe exploring a fintech platform, can onboard with someone like Validus. The process itself is entirely online, and because we're regulated by MAS, we have strict protocols around fund governance, KYC, while still managing to keep everything online for the investors. So I guess the way that it works is that once you've onboarded, you will pre-fund your account into an escrow account. The same way you would maybe, just to really be simplistic about it, load a gift card. And then you can log into either the platform or the mobile app and set criteria for investment to allow the system to automatically invest your funds. So in that sense, it's very simple. But you could also, spend a lot of time reviewing the opportunities and select exactly the loans that you want to invest in as well. A quick question for you on the other side of the equation. How does Validus appeal to SMEs, and what are the benefits of becoming a borrower on the platform?
Currently, we are very proud as the number one digital financing platform for SMEs in Singapore. So why are we a digital financing platform? Because we make use of alternative data sources like the trade data to underwrite loans. So this sets us apart from the traditional lenders such as the banks, who tend to use the traditional sources of data such as the financial statements, bank statements, etc. to determine an SME's creditworthiness, meaning that many SMEs will actually fall through the gaps and are underserved or completely rejected because they do not have the requisite financial statements. And being in the SME industry, we understand generally this sector does not emphasize too much on keeping the documentation properly. So in that case, considering that we are focusing on alternate data, that can be a big plus for them. And using this alternate data it brings in another advantage, that we are able to proactively offer pre-approved financing to them, and that can be done under 48 hours as opposed to say weeks or months it takes for an SME to receive approval from a bank or for business loans. So the speed is one thing and the alternate data is another thing. And other than quick approval and dispersal, an alternative financing platform like Validus is less onerous and enables growth-oriented SMEs to access fast and affordable funds. And how we are able to do that? It's from the accredited investors via Validus to basically then the SMEs can finance their business growth. And so these are certain advantages that basically because of which Validus might be a choice for these SMEs. And if you look at the benefits that they get is if you look at the numbers, so we had conducted an Validus economic impact study. So on that basis, we were able to see that the SMEs who were dealing with Validus actually managed to see a growth, an annual revenue growth of 17%, which is much higher as compared to the market. And so our financing has significantly benefited the SMEs, even those operating in challenging sectors like SMEs in marine industry who have obtained financing from Validus saw a 20% increase in their annual revenue on average, which is much higher than the industry norm. So this was on the revenue growth, but even if we look at the bigger picture, the GDP, the additional revenue generated by SME linked to Validus support economic growth is approximately 18%, which is much more than the overall, which is 5%, or just the SME supported one, which is only 8% GDP growth. So we can see that revenue wise, GDP contribution wise, it's doing much better. And one last thing to just share on the jobs front. So because SME is the SME sector is the major contributor of jobs, especially in Singapore. Actually, it's true for any economy in general. So Validus financing directly and indirectly supported a significant number of jobs. So it was more than 10,000 jobs in 2018. Jobs supported by SMEs linked to Validus grew much faster at 12% as compared to 1% of the SME supported employment growth. So that is a huge jump. So we are very proud of when we see these numbers that we are actually able to make an impact not just on our borrowers but on the industry, on the economy in general. wanted to understand what are the risks associated with the SME lending model for the investors, and what are the risk mitigation strategy that Validus employs?
So at Validus, we do entirely unsecured lending, which is a large part of the value proposition for the SME as well, who oftentimes operates in a low collateral sector, and many of which have recurring cash flow requirements that fuel large-scale projects like infrastructure, construction, and marine and shipping, as Kriti had mentioned. We mitigate risk here by obtaining other forms of security, including things like a personal guarantee from the key person within the SME. In addition to that, in many cases, because we're tying up with large corporate counterparties from whom the repayment is channeled directly back to Validus, we're essentially transferring the risk in that respect to a blue chip entity and removing the risk of funds flowing through multiple parties before reaching us. And lastly, I think as Kriti also covered, we use a lot of tech and data-driven tools, including an automated monitoring tool that allows us to identify early risk warnings or abnormalities in payment habits so that we can act quickly and ensure that there are no lapses in portfolio performance.
I understand. So we are discussing about what we are doing currently, but even within the current scope, there are still other missing areas for the underserved SMEs. So just want to get an understanding from you on what are the missing gaps and how else can we better serve them.
Sure. So I think there are definitely a lot of gaps that still remain, even with all of the solutions out there. I think SMEs are traditionally underserved, even in cases where they may be consuming banking services already. I think looking beyond just lending, though it often sits at the forefront of their needs, SMEs still face a variety of pain points seeking access to general financial services. One of the reasons it's difficult to bank and lend to SMEs is the lack of data availability on them when it comes to things like financial statements or even bureau data. So when it comes to things like lending products, their preference is often for tailored offerings, which are usually smaller in value, shorter in tenure, which also means higher frequency and renewal. And that sometimes makes the cost of underwriting them and servicing them greater than the value of the relationship for someone like a bank that also has a lot of larger enterprise clients. So SMEs, as a result, end up being deprioritized, and they have to go through a lot of hoops to get what they need when the nature of their business is really fast-paced and they require a lot of response times and a simple offering. So I think on our end, we're continuously trying to enhance our capability to offer them a full suite of financial services that bundle together things that are traditionally unbundled across both lending, banking, spend management, etc., to bridge these gaps while also establishing more touch points with the SMEs across their life cycle.
Okay, thank you. And another point I just want to add here, that there's another interesting proposition we are working on, and it's like first of its kind, fully automated working capital product, and it follows a 5-to-1 rule. We call it a 5-to-1 rule because it takes 5 minutes to apply, 2 documents are required for the application, and only 1 minute for approval. So just to put things in context, so for any financial institution to assess an application for working capital, they will need the entire set of documents like financial statements, bank statements, NOA, CPS, etc. And it can take weeks, if not months, to approve the application. Because of this, a lot of borrowers don't even apply for a loan. So our aim is to make the process completely automated and simple for the borrowers so that they can easily access financing whenever they need.
I think, this is also a question that we both probably get quite often, but how has SME lending performed in recent months? On the SME side, for example.
So see, the recent COVID times have impacted every sector and industry in some way or the other. The SME sector was also not left unscathed. So F&B industry, if you see, I don't think that industry has seen, this is one of the worst phases for them. Marine and construction industries, which are the resource-heavy industries reliant on foreign workers, like in Singapore, have seen major delays in projects because of not being able to get the resources. So we have seen all of this, in general, in the industries we work with. But despite this, like we have been lucky, Validus did not see any defaults or major stress in the portfolio. And that is major. Like the full credit actually goes to our anchor partner driven origination strategy. It worked extremely well during this pandemic period, both in terms of portfolio growth and stellar quality. Corporate vendor financing program, or like the supply chain financing proposition that we have, it forms the majority of our loan book. And as these were backed by the corporate, so we didn't see any major challenges in getting the loan settled.
And I think, the same goes on the investor side of things. I think we really took the experience of COVID and tried to spin it in a really positive way, where we took a lot of learnings, did a rapid review of our portfolio, tried to cut back on areas that we might identify risk, like certain sectors that might be stressed at any point in time. And we also took the opportunity to buff up our credit algorithms, to enhance our buyer review processes, and to also develop tools like the one that we mentioned earlier, the credit collections and advisory tool that actually won the MAS FinTech Award in 2020. One more point to touch on related to, I guess, how we handled COVID and just generally, I think a lot of platforms are out there, and we're not all created equal. What should investors and maybe borrowers first, what should they look out for?
Sure. So I think it is very important to understand what the borrowers need to be able to cater to that requirement, to be able to cater to that need. So borrowers always aim for a simple, seamless process, because see, when we're dealing with SMEs, like to be honest, like they won't be financially very sophisticated. Like they will be like, maybe the director is managing like the whole financing space also, like the financing department also. So they don't want to get too much into details when we get into documents. So that's why they want a very simple, seamless process where only a few documents are required for credit assessment. And this is the sentiment Validus works on. In fact, we are able to provide up to $500,000 as pre-approved financing under our corporate vendor financing programs without collecting any credit assessment document. Another feature that is important for borrowers is flexibility. So flexibility of being able to pick and choose the invoices they want to finance, flexibility of being able to pay early without a prepayment penalty, flexibility of being able to stop the financing arrangement without any lock-in period. These sound very basic, but when we look at the market, these are not the things that are generally provided by, say, the financial institutions, banks and all. And this is what Validus is able to provide to their client. Borrower also wants to deal with a financing company where the charges are transparent and there are no hidden fees involved. And that's why Validus charges only interest and disbursement fees. So it's very, very transparent model. It's also essential for borrowers to be able to access multiple products from the same financing company. Like along with invoice financing, they might also need purchase order financing or working capital or even a government-sponsored loan during these times. And Validus is able to cater to these needs of the borrower. So these are some of the things that really set us apart, and the borrowers are able to see value in it.
And I guess, on the investor side, I guess the way that I think about it is if you're looking to place funds in an alternative investment, there's really a large element of trust involved. And so some of the ways where Validus really tries to gain the trust of investors and make it a good offering is focusing on things like regulatory and licensing, a robust origination strategy, strong fund governance through an escrow account, and then proper underwriting principles. I think we really try to look at things holistically, from having a fraud algorithm as well as looking at buyers, the business itself and its financials, the borrowers, directors, and other macroeconomic factors. We really want to do more of what we're already doing, but just better, faster, and at a greater scale. And specifically through technology. I think both Kriti and myself have touched a lot upon things being really simple and straightforward for the SME. We really want to focus on automation and delivering products that really make the experience better for both borrowers and investors, whether it's in the origination process, the underwriting and onboarding processes that allow them to have something that can also even be self-service, like the automated working capital product in many cases. I think on top of this, we also want to focus on establishing more touch points with the SME to provide them with services that are really meaningful to them beyond just lending alone.
And there's so many exciting things happening. So like the full team is so excited right now.
Thank you, everyone. We hope that you learned a bit about us today.